Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on Snap, ticker symbol SNAP. In today's stock analysis, I'm going to share my price targets, some risk and opportunities. I'm going to look at Q2 2022 earnings results, and I'm going to share my DCF model for Snapchat. And lastly, I'll give my final thoughts on Snapchat as an investment. All right, jumping into my price target for Snapchat, I have them from $7 to $8 in the next 12 months. They're currently trading around $10 a share, so it indicates about a 20 to 30% downside from where they're currently trading. Now, in my DCF model, I currently have them around $11.64 a share. I'll share that with you and go over the details as well as the EBITDA multiple of $6.28 later in the video. Now, a few of the risk and opportunities. Starting off with risk, we have, again, Snapchat is previously overpriced. They are about 87% lower than they were 12 months ago. Looking at moving forward, ad revenue is starting to tighten. We saw that with the Q2 results. Free cash flow dropping in Q2 as well. I think they will likely recover, but the question is really when. They were starting to trend towards a higher free cash flow, what we saw in full year 2021. And I think that's where a lot of this overpricing started to go. But again, if you looked at Facebook and some other folks who are looking at ad revenue, they were already hinting that this thing was going to be dropping. So it's a little surprising to me that people are shocked that ad revenue was tightening in Q2 for Snapchat. And then the last thing I'll say from a risk perspective, the all-time low from since Snap's been trading, I think that's 2016, 2017, is around $5 a share. And so I think more than likely that is probably about the floor. Are they likely to get to $5 a share? I don't think so, but who knows in this market, it's pretty wild. Now for some of the opportunities, I'm mainly going to be paying attention to the free cash flow for their future earnings results. Again, as I mentioned earlier, I do think that it can widen back out and it could indicate a buy signal. So that's going to be the main focus for me. Another thing is just watching the EBITDA and free cash flow margins expand. So I'll describe a little bit more of this into the DCF model I'll go over later, is that those things are going to be critical for the valuation inside of my DCF model for Snapchat. And if you are, if the growth rate does go up, which is another big reason why they dropped, was because if the growth rate does expand, it's now below 10%. That could be pretty good for them moving forward, and definitely would hint them to a larger valuation. Now, the last thing is for an opportunity is a potential acquisition. Snapchat is largely focused, not completely, but they are looking towards augmented reality, and a good fit for them, I think, would be Meta. Meta also has a ton of cash on hand and has a lot of financial mechanisms to be able to afford Snapchat. Now, I think there are benefits of Snapchat versus, I think it would complement all of the Facebook and Meta apps that they have out there, and I don't think it's a far stretch to take their advertising power and push it into that platform. I also think it's another avenue for them to compete with folks like TikTok. Just another way to do it. The other part of that is likely if they did sell, I think they would sell for over $10 a share. What that actually would look like is, anyone's guess, but that is my just gut feeling on that. All right, jumping into Q2 2022 results for Snapchat, reported on July 21st. Their earnings per share normalized came in at -2 cents. They beat the analyst expectations of -3 by 1 cent. On the GAAP earnings per share side, they missed by 5 cents, reporting -26 cents per share. And on the revenue side, they missed by $23 million, reporting $1.11 billion. All right, jumping to my DCF model for Snap. Now we have the valuation, as I mentioned earlier, at $11.64 and $6.28 for the EBITDA multiple. Now let's go over some of the assumptions where I came to those valuations. So looking at the growth rate, I really have them at 11% this year and 10% moving forward, with a long-term growth rate of 7%. I have the discount rate at 11%, the EBITDA multiple at 12, and a net debt of about $1.9 billion. So that's actually positive for them, and current shares outstanding around 1.7 billion. Now, moving into some of the things that really play a lot of weight into this. So looking at the EBITDA ratio and free cash flow ratio, these things I like to play with in order to know what they're going to do moving forward. So starting off, actually, let me start with the growth rate. So looking at the growth rate, you can see it's started off pretty dang high, and it's been hovering around 40, had 60% last year. Could have been why they had such a high valuation, was because they started to see these, some growth accelerate there. But now we're seeing growth around negative, basically around low single digits, I think. And they're looking at Q3 as to being flat. They said that in their earnings report that they think Q3 is going to be flat. What Q4 will look like, it's really hard to predict. So 11% could be on the high side for 2022, but that's what I have in my model right now. Just be aware of that. Now, 10% moving forward, I think is very, very conservative for the potential that Snap presents. So again, if you increase those to 20% or 30%, I wouldn't disagree with you because it's possible. It's definitely possible. It's just very difficult to assume that. So I like to be very conservative, and this is extremely conservative in my opinion with Snap. So next thing I want to go into EBITDA ratio and free cash flow ratio, which really play into that EBITDA and the EBITDA margin and our free cash flow. So starting off with EBITDA ratio, you can see that it's been pretty largely dropping in the last few years, which is a good thing. We want that to go from the negative up into the positive side. This year, I'll think be about negative 5% on the EBITDA ratio, and slowly over the next few years going into the positive. That's where we want to see them go in order to even have a positive valuation on the EBITDA side. When I have this EBITDA multiple up here in the valuation. So assuming that they get to half of what Facebook is on their EBITDA margin, that would put them around 20%. Facebook's them around 40% at the moment. Looking at the free cash flow side, they have them, you can see that free cash flow has been significantly, the cash burn effectively has been significantly dropping. Almost in this last year, they achieved 5% revenue to free cash flow, which was extremely good to see. First time they've had positive free cash flow for a full fiscal year since their inception. Wonderful to see that. The question is what are they going to do moving forward? Now, we just saw a quarter of negative free cash flow. What are we going to see moving forward throughout the rest of the year? Likely it'll probably be negative if they're saying that things are going to be flat. They probably were anticipating CapEx to be a lot higher, and as well as operating margins. So this 7% may be optimistic, but if I extrapolate out to where I believe they're going to be over the course of the next 5 years, I do think it's possible that they get all the way up to 16%. Now that I still think that is low as a comparison to some other companies in their space, but again, they're not nearly the size of those companies, so it's difficult to give them a margin as high as a company like Facebook or Google, for example. So in this scenario, I'm keeping it around 16%, and again, those growth rates are relatively low if you're thinking about the potential Snap presents. So that's my DCF model for Snap, which is at 1164 and 628 for the EBITDA multiple valuation. All right, now for my thoughts on Snap as an investment. So right now, I do think it's a high risk play. I do think there is still downside for Snap in the short term. The thing that we're going to have to pay attention, I mentioned this before, is that I think there is some opportunity in the stock. We're just going to have to watch the free cash flow, see where it goes. I don't know if fiscal year 2022 is going to be an opportunity for investors to invest in Snap. I would sit on the sidelines, wait this out, look for opportunity as it gets closer to probably $5 a share, and that might be an intriguing position to enter into. I still think there's going to be a lot of volatility. We're going to need to see ad spend go back up before we see any traction in the free cash flow margin expanding or EBITDA. So those things are very important. Lastly, on the growth side, we're going to have to see that, again, they said they think it's fairly flat for Q3. So again, if you're going to be holding this thing up until Q3, likely you're going to see a flat earnings for Q3. If it's higher, we may see Snap pop, which would be good for folks if they're entering the position. Right now, I think there's too much risk to the downside. Management is, they're non-committal on Q3 outlook. So again, I think as an investor, I would advise to sit on the sideline, at least me personally. Now, I do think it does present, as I mentioned earlier, if it gets down to the $5 range, very intriguing opportunity, has a lot of growth potential. In this model, I only put 10% with a 7% in perpetuity. And again, that's probably like the next 15, 20 years. So I do think there is a lot of opportunity for Snap stock, but right now is not the time to be buying, in my opinion. If you like this type of content, please consider subscribing. And if it is on personal finance investing and stock analysis, please hit that like button. My name is Frank Finance, out.